It's going to be a busy week ahead. We're seeing the Japanese yen, for example, strengthening, but it looks like it might not be just direct reaction from what happened in Russia and safe haven bids, but because we have the currency chief in Japan also talk this morning and really not ruling out any FX options.
No, that's right. They're not going to pre-announce any intervention, but they're getting very nervous and they're ready to intervene if the yen gets much weaker. We actually think that the yen's going to strengthen over the next 3, 6, 12 months because the trade deficit is going to turn into a trade surplus, especially for goods and services, because tourism is going to keep booming here because mainland Chinese from the People's Republic of China have not really increased in size very much so far. It's very full of tourists now, but just not from them. But they used to be 50% of all tourists, and we think that they're going to start coming in en masse pretty soon. That will help the yen, along with several other factors.
Are those several other factors, of course, the differentials in rates and where the BOJ is headed as opposed to the rest of the world?
Absolutely right. We see the Fed doing 25 basis points more and then stopping, and then that will give some relief on the rate differential basis, and that the U.S. 10-year bond will start to decline in yield in the fourth quarter of this year. I mean, there's quite a few things. Also, the amount of money that's flowing into the Japanese stock market these days is quite tremendous, and so that's going to help the yen as well.
When it comes to sectors, where do you think you're going to see more longevity in this rally?
With the yen strengthening, and I guess I should have mentioned before that we do see YCC bumping up 25 basis points by the end of the year. We've penciled that in. It's not certain it's going to happen, but that would also obviously help the yen too. On sectors, yes, it wouldn't be the yen-sensitive sectors that would be doing particularly well in this kind of environment. It'd be more the domestic plays and probably less of the commodity plays too, because we see commodity prices tailing off for the rest of the year. So it's more the domestic demand plays, the ones that are based on tourism and other sort of value kind of plays, of which there still are quite a few in Japan.